Making the stock market easy. I've been doing this for 50 years, helping people just like you. So let's get started. Here we are. This is now March 5th, 2025. Now, the last time we were together, I showed you how if you go back to October of 2023, this was the trend in the S&P. Now, the S&P was pretty strong because it was above trend. Pulled back a little here, but it still stayed above trend. But something happened in August. It went below trend. Now, why is that? Because the institution, they've been pulling their money out. Matter of fact, just recently, they jumped $258 billion worth of stock. And why are they doing that? Well, because the PE ratios are terrible. They're overvalued. You take the S&P, PE ratio is 30. That means investors, okay, they are paying 30 times more than the company's earnings. What are you, nuts? That's double the historic PE ratio. The NASDAQ PE ratio is 42. That means investors are paying 42 times more than the company's earnings. That's about 39% more than the historic PE ratio. That's insane. But that's what the tourist traders are doing. So the why is here. Why every time they rally it, it doesn't hold trend like back here? Because the big institutions are dumping their stocks, and the tourists are coming in buying on every dip until they run out of money. And then that's when you start getting the momentum to the downside for a correction or crash. Now, something has been changing. Let's take a look at the money change. Uh-oh, look at this. See this right here? It's breaking down because the institutions, as I told you, are not going to participate when they have PE ratios this insane. Now, let's go take a look at what else is going on that Wall Street doesn't want you to know, or the fake business news networks don't want you to know, is the bank stocks are key. Now, we have the S&P. That's the big part of the market, right, the S&P. Now, the S&P, remember, think of it, it has as a bar stool, and it has 4 legs on it. So you have tech, XLK, and it looks like the bully came in the bar and kicked this leg off of that stool. Look at that. Tech, are you kidding me? It's getting crushed. And then, but the banks, they were holding up pretty good. That was the last group that was holding up. But somebody kicked the leg off of the bar stool on the banks. Why? I thought they were doing well. Well, they're not, because their earnings are getting worse and worse. And why is that? Because the same thing that happened in 2008 is happening now. In 2008, what led up to the crash was, again, delinquencies in credit cards, delinquencies in auto loans, delinquencies in mortgages. Here we are now, 2025. Same thing's happening. The same thing. Autos, credit cards, mortgages, delinquencies are climbing. Look at this. Same thing. So now you take the third leg, healthcare. Looks good. But when you go take a look at healthcare, there's only really one stock holding up the whole healthcare industry right now, and that's Johnson & Johnson, and we're long in that stock. Now let's take the fourth leg of the bar stool, consumer discretion, XLY. Look at that. So we've lost our tech. We lost our banks. That was the final thing that's holding everything up. We lost our healthcare. Only one stock holding up, and we finally lost our consumer discretion. So anyone that says this market's going to continue to go up, there's the proof right there. There's the proof. There's too much stress on this market. There's way too much stress. And when you lose the institutions, you lose everything. And when you see the consumer, see what Home Depot was doing? And we're short Home Depot. Home Depot was that's a great indicator as to how's the consumer really doing, okay? Not the lies we get from the talk radio shows or financial TV shows. Look at this. We've been short Home Depot. When Home Depot okay, they're contending with falling consumer confidence and uncertainty that's in the economy. And that hems in the consumer's ability to spend money. They can't spend money on home improvement. And then when you finally lose the whales in the stock market, you lose NVIDIA and Tesla and now Bitcoin stock on top of the bank earnings that are getting worse. Anyone tells you the market's never going to come down again, don't worry about it, they're wrong. So I hope you enjoyed this, okay? So until the next time, remember, come back to where I make this market easy to understand. I'll see you on the charts. Click the link to my bio for my stock picks and my color-coded charts.